Hello and welcome to The Bottom Line here on TVP World, where we break down some of the main business and economic stories of the day. I'm your host, Marie Cato. No one likes paying taxes, but we all know that it needs to be done at some point. And even tax evaders will have to face the truth sooner or later. At Thursday's press conference, Poland's Finance and Economy Minister Andrzej Domański announced that he intends to clamp down on foreign corporations and their tax evading practices. Jan Kennedy brings us more.
After taking the helm at the newly established Ministry of Finance and Economy, former Finance Minister Andrzej Domański wasted no time getting to work. One of his top priorities, boosting state revenues by ensuring that multinational corporations pay their fair share of taxes.
Polish companies and taxpayers have the right to fair competition in the market. We know very well that the aggressive use of transfer pricing distorts that competition.
According to the Tax Justice Network, transfer pricing is a technique used by multinational corporations to shift profits out of the countries where they operate and into tax havens. The technique involves a multinational selling itself goods and services at an artificially high price, and the scale of the issue in Poland is quite significant. According to the ministry, in 2024 alone, undeclared income that companies attempted to shift abroad using transfer pricing nearly doubled compared to 2023, amounting to some €190 billion. And in the first half of 2025, tax underpayments from such practices were already 30% higher than in the whole of 2023. And the government is eager to crack down on these practices.
The Ministry of Finance would like to increase interests, or we may expect it will in more detail look into the settlements between related entities, especially in cross-border transactions, in order to find any discrepancies, any tools or any way that allows the multinationals to shift profits between the tax jurisdictions.
The government's effort will consist of 4 pillars: standardized electronic accounting submissions from 2026, a national e-invoicing system to monitor business transactions, a competence centre in Kraków for transfer pricing and tax planning oversight, as well as a task force to investigate tax avoidance and recommend legislative changes.
We want to create something like a vaccine, a system so resilient that it discourages aggressive tax planning in the first place. But we also need an antibiotic, which comes in the form of audits and the work of our new competence.
The issue of international corporations evading taxes in Poland has been flagged recently by Rafał Brzoska, one of the richest men in the country, who accused foreign competitors of his parcel delivery company of not paying all the taxes that are due in the country. While experts see fighting these practices as a real challenge, based on past similar endeavours, they are full of hope that the government's task force will put up a good fight.
From my perspective, as an advisor, as a man working with the transfer prices for 20 years now, I believe, it's a very good move. So we have similar task group in the Ministry of Finance dealing with the APA, Advanced Pricing Agreements applications. And this cooperation is very efficient and very good. And I hope that this new task group will be at least as competent as the Minister of Finance is.
In its efforts to curb aggressive tax optimization, Poland has already adopted one of the solutions, so-called global minimum tax on international companies. But its effectiveness will be known only in 2027, once the first tax statements from big players pour in.
So Poland understandably wants the big global names investing in the country, but that also means paying taxes. And by the looks of it, some of those foreign companies need to be scrutinised and set straight. On the show today, we're going to focus on the big players and their tax evading practices. And to find out how this might change the landscape, let's speak to Paweł Wojciechowski, former Polish finance minister. Hello and thank you for joining us.
Nice to be here again.
So tax optimization, there's tax optimization and then there's tax optimization. One is clever and the other pushes the boundaries a bit too far by the looks of it. How severe is the latter in Poland and how is it being taken advantage of by foreign companies?
Well, generally, there is the issues about base erosion, so-called, and profit shifting. So if you have base erosion, which means there is no base to tax the profits, and Poland is very vulnerable for that, because most of subsidiaries of the multinational companies don't have the intellectual property here, and you can transfer pricing, through royalties, through fees, loans, special structures, and you can plan this tax avoidance, So this is one aspect of that. There's other aspects of that, which is how Poland is compliant with so-called first pillar and second pillar of this BEPS program of the OECD, which is Base Erosion and Profit Shifting Program, that has been inaugurated in 2009 at G20 meeting in London. So that is something happening, over time, and Poland is progressing towards trying to, like it was mentioned here, try to find a way to nudge against this type of aggressive tax planning and this tax avoidance. So altogether, there's a lot of elements like, minimum corporate income tax, 15% is being introduced, and in the EU and in Poland, this was revised last year in 2024. After unsuccessful implementation in 2022. And there's big discussion about other elements which relate to big tech companies, who actually benefit from the market by providing some platforms which are being taxed, and profits are being taxed in other jurisdictions.
Is it digital tax that you're referring to?
Well, digital tax is being applied temporarily instead of so-called pillar one of this major kind of framework, which is called BEPS by the OECD, and this is applied, for example, by France and other countries in meantime, because interim period to fulfill the gap, because some countries like the US and India, for example, don't want to agree on this framework fully, and therefore we cannot implement this, digital kind of tax, broadly in the EU as well.
So transfer pricing is another one of those issues that Andrzej Domański wants to address. What are the main issues with transfer pricing, and how do you think that they should be addressed?
Well, transfer pricing is, it is quite simple. You inflate the costs. So if you have inflating the cost, you have lower profits. Then, of course, that actually means base erosion at the same time as profit shifting, because you shift the profits to the parent company from the subsidiary company. In Poland, there's a lot of subsidiary companies in many sectors. You have, for example, those who are intensive high-tech companies, so they have intellectual property and they have transfer for the IP is in the parent company, so there's a potential transfer pricing. There's also some unjustified, transfers. There was mention between Mr. Brzoska, who is the owner or CEO of InPost and DHL. That's a perfect example. If you compare the profits of the two vis-a-vis the market shares, it means that Mr. Brzoska, who has a company here in Poland, is paying much more taxes. So effective tax rates are much higher for the companies being situated here. So it's also not a question of tax collection, effective tax collection by the Krajowa Izba Skarbowa, which is the domestic internal tax service, but also fairness to other customers, other companies such as small and medium enterprises in Poland who would like to compete with those large multinationals.
So if it's so easy, because at the very basic level, transfer pricing is a very simple concept, but Andrzej Domański wants to address this. and actually target the foreign companies who are taking advantage of what it is here in Poland. How do you think that it needs to be addressed?
Well, it is already being addressed, you know. First of all, the implementation of 15% global tax, you know, 15%, which means if you're caught that you should pay the you know, multinational corporation of who the threshold is 750 million euro globally, and if you're caught then you're paying those taxes here, then of course you have to pay those taxes, you know, in the country where you caught, or in the other country where is your parent country, or in between.
So there has to be higher scrutiny.
So in fact, you know, if you have to pay anyway the 15% corporate income tax, then you don't want to avoid. You know, then some countries, you know, like Ireland and Netherlands, who have special IP rules, and therefore, you know, that attract, you know, for example, the big US companies, you know. So they apply for those big companies 15% rate, but they have a special regime for IP, and therefore they can lower, they can attract, you know, the share, they have more profit than the other countries who are they actually the markets are, you know. So the thing is that this is one thing. So the global income tax of 15%. A second one, of course, I mentioned this big tech companies. That is, I think, will come. There was discussion in the air that Deputy Prime Minister Gawkowski, who's also the Minister of Digital Economy, he mentioned that the ministry is working on that. And then there was the discussion, you know, between the ministries, that we will probably have to wait for this to happen, for the kind of coherent multilateral agreement, the OECD, which will be approved and implementable among all the OECD countries.
So basically, it's all about targeting these companies in a more efficient
It is more. It's more in the EU is targeting those companies, and of course those companies are big multinational companies which are targeted for about, I think it's the threshold is 20 billion euro in revenues, and profitable companies. Second element is tax havens. You know, tax havens relate to the issue of wealthy individuals, high net worth, you know, wealthy individuals who divert their income, not their income, but their revenues, or you know, the income as well to some you know, haven countries, tax haven countries like British Virgin Islands, for example. It's one of them. With zero, you know, corporate income tax, you know, there's no transparency what is happening there. There's special rules on financial sector. So in fact, you know, you can channel, you know, the wealth from and not being taxed, you know. And there's a lot of those type of things, you know. And there's like kind of loopholes, you know. Any tax haven can create a hassle to all the countries. So in 2009, I mentioned in London meeting on G20, there was a, you know, blacklist of countries. You know, I remember I was the ambassador of the OECD, and we discussed this issue because the Swiss ambassador said, why Switzerland's on the blacklist? And Switzerland made a huge effort to adjust, and it's not anymore on the blacklist. But there is a lot of tax haven jurisdictions. So in the special framework created by the OECD and supported by G20 and by the European Union, there is a so-called International Tax Forum that created first step, exchange of information among all the tax authorities in the world who would like to participate in this tax forum. So first thing is transparency. Let's exchange the information. Second element, of course, is to define, you know, what is the aggressive tax planning, you know, and what is the kind of optimization that can happen. And then it goes to this called transfer pricing issue. For example, there's an issue of discussion during the Polish presidency that happened the first half of the year. There was discussion how to push the directive on transfer pricing, and there's some countries who opposing in the EU because they have special rules. Okay, taxes is the issue of for the domestic for the countries from the member states jurisdictions to decide, and then the harmonization of the rules is very difficult.
A question that comes to mind is we have all these changes, and there's definitely a sense that this press conference that took place now with Andrzej Domański is something that has come up, and he's expressed a lot of resolve to deal with this now. But this issue of unfair taxation, or these problems, for instance, Google and Facebook put together, they've paid less tax than, for instance, the CEO of WP Holding, media and e-commerce holding company.
Yep.
That's something that's been in the media. Rafał Brzoska, the CEO of InPost, he expresses frustration with that. But the issue of tax evasion and all these issues that we've discussed so far has been around for a long time. But why has this come up now? And why is Andrzej Domański addressing these issues with such determination now?
Maybe it was a fact because Mr. Brzoska, who was commissioned by the government to do the deregulation, he came up with this appeal that the Polish companies, small and medium companies, should be treated fairly. It's a question of fairness to compete. But I think, in general, you can say, according to this Tax Justice Foundation, about 36% of the profits of the multinationals are being shifted all around the world. So it's not a small problem. But in terms of the EU and Poland effect, maybe that is below 1% of GDP. So the fact altogether, if you take altogether all the different measures, and you say, do you very effective, with the tax authorities, with everything that you do in so-called Pillar 1, in Pillar 2, and this transfer pricing law that we have in place, maybe you can gather maybe between 1.5 to 2 billion zloty per year.
So it's not a huge amount.
Not a huge amount. So not a huge amount, but it creates a deterrence to increase the aggressive tax planning, tax avoidance. So it's a kind of vaccination against this malaise, this disease, who is and this unfairness, to the local companies that would like to invest in Poland. So that's a good sign to give to that we are determined to do that now, and I think the Minister of Finance Domański is very committed to that. Although I have to say that it all depends on the tools that you use, because of course the penalties for transfer pricing could go up to between 30 to 50%. So very high, but then you have a potential of dispute, and the question is, where is the jurisdiction for dispute? And there's an issue, for example, maybe you treat unfair companies and you say accuse them on transfer pricing, but at the same, and then happens that you actually lose the case. So you have to have proper tools in the tax authorities. They'll even use the artificial intelligence to kind of flag and find anomalies in the difference between, what is the market share, how much of profits they make, how much revenues they have, what's the size of operations, and they check that. But of course, it's a very delicate and very complex subject, and the results really depend on the tools that you implement.
And I also sense that it's something that will require a lot of coordination, at least within Europe, and it has to be a watertight system.
Exactly.
But it sounds like it's something that will have to require a lot of broad communication.
Well, we hope to have multilateral agreements because they're more effective. But of course, if not, we'll do our job in Poland as we must.
Okay. Paweł Wojciechowski, former Polish finance minister, thank you so much for being with us.
Thank you very much.
And that concludes The Bottom Line for today. I was your host, Marie Cato. We bring you the best of regional business Monday to Friday at 5:10 CET on TVP World. And for the latest, follow us on X and on tvpworld.com. Goodbye.